In this video, I'm going to show you and talk about why you're probably missing out on one of the greatest opportunities of your lifetime by simply being a Bitcoin bear. So we're going to get into all the analysis and talk about if the recession is going to cause Bitcoin to dump, all the way into the $60,000 range, and is it going to be the beginning of a bear market, and if Bitcoin is never going to enter into the most expected and highly anticipated bull run that we thought would happen, and was 109 actually the top for Bitcoin. So all of this we will get into in today's video. Make sure to stay tuned and put on your hopium tanks, because I personally think that that's not going to be the case, and I have a lot of analysis to get into and talk about why I believe that is the situation. But before jumping into the price of Bitcoin, I thought, you know what, let's kick off the video in a light mood and start things off with a nice joke. Okay, tell me in the comments if you laughed at that, but so the joke is Ethereum. I mean, Ethereum is incredibly funny. Well, it's not funny because I lost a lot of money from Ethereum, but all I can do is just laugh about it. Because if I think too much about Ethereum, then I'm just going to be upset and miserable the entire day. But it is what it is. Like, Ethereum has fallen down from a support which has been holding since the bear market in 2022. And, this drop is really not pleasing whatsoever. I mean, even if you do see a retest back to prior support, there's very good chance that you turn into resistance and dump down again. So, I mean, Ethereum is just very, very unfortunate. And until quantitative easing comes in, until the money printer goes on again, then altcoins will sadly remain in the dustbin. And it's going to be a Bitcoin dominant next few months. So that is the joke that I wanted to begin things off with. And this is actually the real joke. So Michelle says over on X, apparently John Cena is following every Bitcoiner on Twitter. If Cena is following you, I want to follow you too. Let's connect Bitcoiners with Bitcoiners. And then I said, who is following every Bitcoiner on X? Question mark. If you're in my generation, you got that joke. If you're a millennial, then you probably didn't understand it. Anyways, I just realized I'm not the funniest person in the world. Let's talk about Bitcoin. So Bitcoin is converging massive support at the prices of $80,000. The first very important line of support you have is the previous resistance of the huge inverse head and shoulders pattern. This broke out after Trump became president, and of course, after the money printer started to go massively parabolic. Bitcoin follows global liquidity. Therefore, we broke out, we went above prior all-time highs, and like we do in every single cycle, we started pumping again. Until we reached a top of 109, we had a double top pattern, Bitcoin reversed, and we're now testing prior resistance and turning it into hopefully support. So that is one very bullish reason why I think you should be accumulating Bitcoin. You want to be buying Bitcoin at support, not at resistance. And if you want to be doing that, then Weeks is giving you an unbelievable campaign. So if you sign up to Weeks using this link, if you haven't done so already, we have an earn 50% deposit bonus if you sign up, right? So these are all the parameters. You can stop and take a screenshot and check it out for yourself. But basically, if you just link your phone number and email after creating your account, which takes around a couple of minutes, then you will get an airdrop, hopefully between 10 to 100 USDT. And then if you deposit $200 and basically do a trading volume of 10K, which is essentially $200 on, it's going to be quick math, 10x leverage is $2,000. Then if you do that 5 times, you'll get like a 100 USDT free trading bonus. So you can look at all these deposit and trade requirements, and you can get free money if you use the Weeks link down in the description below. And that you can use to buy a Bitcoin. Because again, I think that number one, first reason, very good support from prior resistance of the inverse head and shoulders pattern. Then the second one is that we have the testing of the support exactly the same place with the 50 SMA on the weekly time frame. If you notice in Bitcoin's history, you have never broken, well, in this bull market specifically, you've never broken below the line of support that the 50 SMA has given to you. We were trading in a huge consolidation between March to November of last year before we saw the final breakout. And we did have a pretty parabolic exponential run between October 2023 all the way into March of 2024. So Bitcoin needed to, give off some heat and, consolidate a little bit, test the 50 SMA, and then continue vigorously pumping towards the upside. That is what happened. And the support has given us that parabolic support, of which if we do see the bounce from here, then we should see at least one more major parabolic move to the upside, potentially between the 130 to 140K levels. Another very good reason to be buying Bitcoin. But if you don't like to see this cycle as a parabola, then I completely understand you. What you can see it as is a linear sort of increase. So if you draw this trend line onto your chart, you will notice a linear line of support forming. So if you look at this linear line of support, March, or in fact, February 2023, you tested bottom of the bear market. Then you tested find resistance in October of 2023. You break above it, boom, price starts to go up again. Obviously, you tested right here in September of 2024, and now you're testing it once again, and that should give us momentum to push to the upside. And then the obvious question arises, okay, then what if Bitcoin breaks below these lines of critical support? Well, if that happens, then the same thing that happened to Ethereum will basically happen to Bitcoin. If you break below these lines of support, then Bitcoin will go into a massive downtrend. Just like the S&P 500, just like the price of Ethereum, Bitcoin will unfortunately see the breakdown to the downside. How much downside will Bitcoin go? Well, I don't see Bitcoin personally falling below this line of support right here, which is at $71,000, the all-time high created back in March of 2024. That would be a maximum drop of, let's have a look, another 15%-ish. And after seeing that 15% drop, then I still believe that 2025 will end in a bullish way, and 2026 will be the massive global recession. So if you're like waiting to buy Bitcoin just in case of a 71K retest, I wouldn't personally be doing that because it's almost impossible to catch the exact bottoms on Bitcoin. So what you can do is you can buy a little bit of Bitcoin now, a little bit of Bitcoin if we drop up, if we drop down. But if we do get a confirmation with next week's candle that we see some sort of strong sign of reversal, then that will be a good identifier of Bitcoin going back to over 100K and beyond. So I would just be accumulating as much Bitcoin as possible at these levels, not only because of the technical analysis, but also because of the external factors. If you guys are not familiar, trading is just based on psychology. When there is fear and people panic sell, then prices go down, and people get greed and euphoric, prices go up until you see a sort of an exhaustion in those buyers, and then price reverses. So it's all psychology. Trading is all psychology. Candlesticks are psychology. It's the representation of human psychology on a price chart. And you look at so many different factors, and there's like tons of different factors that you can see over on X. Like there's at least 15 that I found for today's Moonshow. Hopefully I can get through all of them. But you can see the World Uncertainty Index going up. I mean, the best identifier of global uncertainty is gold, hitting $3,000, $2,999 right now for 1 ounce of gold. That's like the biggest identifier of global uncertainty. It's the price of gold going to astronomical new all-time highs. So there is a lot of uncertainty. People are very scared. The amount of fear that we experience in the market has not been seen, not only in crypto and Bitcoin, but also in traditional markets ever since 2022, the bottom of the bear market. And historically, whenever there is so much fear and so much FUD and so much anticipation of a bear market, usually it is a time to buy that asset that you believe in the long run. And obviously, if you do see a breakdown on Bitcoin, it's obviously possible. I mean, Trump is super uncertain, and the S&P can continue dumping. And if it continues to dump, then Bitcoin is also very much correlated to that. So everything is possible. But if you believe in an asset or a product like Bitcoin, I like to see Bitcoin as a product. If you believe in it in the macro, then even if it does dip another 20%, we know that if you buy Bitcoin and hold it for 4 years minimum, you're always going to be in profit. So I'm not super concerned. I'm continuing to buy. And there's so many factors suggesting that this could be a local bottom compared to the probability that Bitcoin does decide to go further towards the downside. And actually, in a matter of 5 days and 5 hours, we're going to be seeing the FOMC meeting. Currently, 97% chance that they don't cut rates. But if you go into May, then the probabilities of a rate cut, 30%, 69% no. June, we're looking at, let's see, June, there's like almost, well, not guaranteed, but 56% rate cut. And then July, you're looking into even the 3.75% ranges. If you look at inflation, I mean, Trueflation shows, a lot of people are talking about Trueflation showing 1.5% inflation. And by the way, if you don't know what this tool is, it's basically a blockchain-based CPI calculator. We know that the CPI, which is the official demonstrative index of how much inflation has increased year on year or month by month, that is a complete lie because they changed the underlying basket of goods to their liking to manipulate inflation data. But Trueflation, they self-proclaim to have 30 million individual unique basket of goods that they observe, and convert all of that into an index using blockchain technology. And that's why you see that it was only 1.5% compared to 2.9% inflation, which the Federal Reserve suggests is going on. Now, I don't know if it's true or not. You can go into the composition. It goes into housing, transport, utilities, health, etc., etc. You can go into the fact sheet itself and look into the product specification. But of course, there is no real way of understanding if it's true or not. So a lot of people look at it. It's not a good reason to assume it's true, but it does look much more, at least it looks much more like less of a scam than the CPI data, where we don't exactly know where things are coming from. So here you see that there's only a 1.5% change on inflation year on year in the US, whereas the CPI data shows around 2.9, 2.8%. Now, that's a good sign because that means you're way below the Federal Reserve's target of 2% inflation to reduce the interest rate. So that's a very good sign. And then you look into the labor market. I mean, the labor market isn't really weakening, so to say. I know that non-farm employment was at around 235,000 in December, and then it dumped to around 170,000. But that's because of seasonal employment changes. In December, it's Christmas, it's holiday season, so obviously you need more workers. So I don't think it's weak enough for the Fed to say, "Oh my God, we're going to weak labor market. We have to cut rates." I don't think that's the situation. And then there's one more thing, which I completely forgot off the top of my head. So I don't see any signs that is forcing the Federal Reserve to say, you know what, we need to cut aggressively. We need to do like a massive dumping in cuts. So if you go Fed funds, I mean, I think it's what's expected is they will just cut a little bit like they did here. And I mean, there's just no need for a massive rate cuts. This was COVID. So obviously in COVID, with all the new bills passed, $2.1 trillion of funding and massive economic depression, they had to cut things very quickly to stimulate the economy. But we don't have a black swan event like such back in 2020. So I don't see them doing a vigorous rate cut and then massive amounts of liquidity coming into the economy, therefore pumping the price of risk on assets. I see that to be a little bit not happening, right? So I think it's going to be a gradual decrease, and that would push altcoin season probably all the way to the end of this year, where rates are down to around 1 to 2%. So that should allow alts to see the run that we're expecting, but it would take another 7 to 8 months until that happens, which is bad news, right? It is bad news. And right now, I think it's very important to be Bitcoin heavy in your portfolio. This is a good chart. You can look at the monetary global money supply. I hope that made sense. M2 money supply is bottoming. When you overlay it with the price of Bitcoin, it feels like all crypto people are depending on this chart alone to save us from going into potential lower prices. Usually Bitcoin correlates the M2 money supply or global liquidity or the amount of money in circulation globally in the economies. Because the more money there is, the more higher the price of risk on assets go. And so far, the correlation has been incredible. I mean, you look at the Trump pump. I mean, during the Trump pump, M2 money supply is rocketed too. During the March to November consolidation, M2 money supply was consolidating too. This was the dump, and then the price of Bitcoin followed. So there's a lot of similarities, and I think Bitcoin will follow exactly what the M2 money supply is doing. It doesn't mean that we're bottoming as we speak on this day. Like, it's just, that's not the case. Because there is a 75-day delay before Bitcoin follows what the global liquidity follows. So it can take a little bit more time until Bitcoin does see this pump. But we're either very close to the bottom or Bitcoin is already bottomed out, and we could consolidate for a few more days or a few more weeks before seeing that pump back to the upside, which is completely okay. But think of it as an indicator which is telling you in advance of time, saying that Bitcoin is going to go back up. So that's why I'm saying good time to be accumulating and buying as much Bitcoin as possible. But guys and girls, that is pretty much it for today's video. I hope you enjoyed it. It was a bit more of a thorough and interesting analysis. I hope you enjoyed it. Let me know in the comment section down below if you think Bitcoin will bottom here or if Bitcoin will continue dumping. From my audience and from the Moon Show, it appears that everybody's so bearish. And usually when you see that much bearish sentiment and people not caring about Bitcoin and cryptocurrencies, that is a huge sign that Bitcoin and crypto is bottoming. So I'm trying to buy as much as possible, and hopefully you're doing the same thing. So guys, enjoy the rest of your day. Enjoy the Moon Show later on tonight. And with that said, thank you so much for watching. Have a great day, and I'll see you all on the next video very soon. Take care, guys, and as always, bye-bye.